Here's the investment strategy nobody teaches you in school. It's called the Dividend Snowball, and it's how you turn a modest portfolio into serious monthly income. The concept is stupidly simple, but most people never implement it. Let me break it down. You invest money into dividend-paying assets. Those assets pay you cash every month or every quarter. Instead of spending that cash, you immediately reinvest it to buy more shares. Those new shares generate more dividends next period. You reinvest those dividends to buy even more shares. More shares create even more dividends. And you just keep doing this over and over. That's the snowball. Here's why it's called a snowball and not just compound interest. Picture rolling a snowball down a hill. Start small at the top. As it rolls, it picks up more snow and gets bigger. The bigger it gets, the more snow it picks up with each rotation. Eventually, it's massive and moving fast on its own momentum. That's exactly what happens with dividend reinvestment. Starts slow, builds gradually, then suddenly you're generating serious income without adding new money. Now let me show you why this destroys traditional investing approaches. Traditional investing says save money, buy and hold, hope price goes up over decades. You get zero cash flow during the accumulation phase. You're completely dependent on price appreciation, and you don't benefit until you sell, which means you have to destroy your portfolio to access your wealth. Dividend Snowball Strategy is completely different. You're getting cash flow from day one. That cash flow is buying you more income-producing assets automatically. You benefit during accumulation, not just at the end. And you never have to sell anything to access wealth. The income stream just keeps growing and eventually supports your lifestyle. Make sense? Drop a comment if you've started building your own dividend snowball, or if this is a new concept for you. Let me give you the math behind why this works so powerfully. Imagine you start with a portfolio generating $100 monthly in dividends. You reinvest that $100 every month back into more dividend-paying shares. Let's say those shares yield 5% annually. First month, you reinvest $100. That buys you an extra $5 in annual dividends, or about 40 cents monthly. Doesn't sound impressive yet, but you keep doing it month after month. By month 12, you're reinvesting over $105 monthly because your income already grew. That buys even more shares. By year 2, your monthly dividend income might be $115 instead of $100. All from reinvestment, no new capital added. By year 5, you could be generating $170 monthly. By year 10, maybe $300 monthly. Same starting capital, you just kept rolling the snowball. Now here's where it gets really interesting. Most people don't start with just $100 monthly. They're actively adding new money while the snowball's already rolling. That's like adding more snow to an already growing snowball. You're attacking the problem from both sides, new contributions, plus reinvested dividends. The growth curve stops being linear and starts looking exponential. That's when people start texting me asking what the hell I'm doing differently. If this is making sense, hit that subscribe button. I break down the actual mechanics of early retirement through dividends every single week. No fluff, no theory, just what actually works. Here's the part that separates people who succeed with this from people who quit early. You have to ignore price volatility completely during the accumulation phase. The snowball strategy only cares about one metric. How much dividend income did you collect this month compared to last month? Price went up? Great, doesn't matter. Price went down? Great, doesn't matter. Did your income go up? That's the only question that matters. This mindset shift is harder than it sounds. You're programmed to care about account value. You see your portfolio drop 10% and your brain screams that you're losing. But you're not losing anything if your income stayed the same or grew. In fact, price drops during accumulation are your best friend. Lower prices mean your reinvested dividends buy more shares. More shares mean more future income. You should be excited when prices drop, not scared. Quick disclaimer, I'm not a financial advisor and this is for educational purposes only. I'm not selling courses on how to get rich. I'm just someone who figured this out early and feels obligated to share it. Everything here is my own journey. Your situation is different. Your risk tolerance is different. Your timeline is different. Do your own research, but at least understand what's possible. Because most people don't even know this path exists. Let me tell you about the 2 phases of the dividend snowball. Phase 1 is accumulation. During accumulation, you're reinvesting every single dividend automatically. You're not touching the income. Your only goal is growing the snowball as fast as possible. More shares, more dividends, more reinvestment. This phase might last 5 years, 10 years, 15 years, depending on your starting point and contribution rate, but you're building the machine during this time. Phase 2 is income mode. This is when you stop reinvesting and start spending the dividends. The snowball stops growing, but it's big enough now that the income supports your lifestyle. You've reached your freedom date. The beautiful thing about Dividend Snowball Strategy is the transition from phase 1 to phase 2 is seamless. You don't sell anything. You just flip a switch and start spending what you were reinvesting. Portfolio stays intact, income keeps flowing. Compare that to traditional retirement. You spend 40 years accumulating, then you start selling shares to fund retirement. Every share you sell reduces your future income. You're eating your own capital. Dividend Snowball lets you live off the interest indefinitely. The capital never gets touched. Here's what most people get wrong about dividend reinvestment. They think it's optional or something you do when you feel like it. Wrong. Dividend reinvestment during accumulation should be automatic and non-negotiable. Set up DRIP programs or automatic reinvestment through your brokerage. Remove the decision from your hands entirely. Because if you leave it manual, you'll talk yourself into spending it, especially during months when money's tight. Automatic reinvestment removes willpower from the equation. The snowball grows whether you're disciplined that month or not. Now let me show you how the snowball accelerates over time. Early years feel slow because you're starting from a small base. You reinvest $100 and it barely moves the needle. You reinvest another $100 next month, still feels insignificant. But around year 3 or 4, something shifts. Your monthly dividend income is now several $100s. Reinvesting several $100s monthly starts making visible impact. Your income growth rate accelerates. By year 7 or 8, you're reinvesting over $1,000 monthly just from dividends alone. That's buying serious additional income every single month. The snowball's now big enough that it's growing faster from its own momentum than from your new contributions. That's the inflection point. Here's the psychological benefit that keeps people going. You can track your progress in real time with Dividend Snowball Strategy. Every month, you see your dividend income number. If it's higher than last month, you're winning. Traditional investing gives you no feedback except price, and price is random noise that doesn't tell you anything about progress. Dividend income is signal. It tells you exactly how close you are to your freedom date. When your monthly dividend income equals your monthly expenses, you're done. Game over, you won. That clarity makes the entire journey less stressful. You know exactly where you are and exactly what you need to get there. Drop a comment and tell me what your current monthly dividend income is. Even if it's tiny, I want to hear it. Because every snowball starts small. The only question is whether you're rolling it or not. Here's what I'm doing personally. I'm in full accumulation mode right now. Every dividend gets automatically reinvested. I'm also adding new capital every month on top of that. My monthly dividend income has been growing at double-digit rates year over year. Not because I'm smart, because the snowball's working exactly like it's supposed to. And I can see my freedom date getting closer every single month. That's the power of having a clear metric you can track. Now here's the mistake I see people make constantly. They start the dividend snowball, it's working great, then they get tempted by some growth stock or crypto play. They pull money out of the snowball to chase returns somewhere else, and they completely kill their momentum. Here's the truth. The dividend snowball works because of consistency over time, not because of genius stock picking. The moment you break consistency, you reset your progress. Don't sabotage yourself chasing shiny objects. If you want to see exactly how I structure my dividend snowball, including fund selection and allocation strategy, check the full playlist linked in the description. It's all there. And make sure you grab the free lead magnet about the 7 retirement myths. It'll show you why the traditional 40-year plan is designed to keep you working forever. Join the community, watch the next video, and I'll see you in the next one.